Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can hopefully better grasp what's happening in the world, the global world that we're all in and invested in. Our portfolio continues to do exceptionally well. Our global tactical opportunity strategy, which is very adaptive to not only market conditions, and as I've said to many investors over the years, investing is not just in stocks and bonds. It's not the stock market. It's not just the bond market. It's multiple asset categories around the world. We continue to be invested in the top 5 based upon our proprietary formula for our global tactical opportunity portfolio, GTOP as we call it, in those top ranked sectors, and they're performing exceptionally well. Making changes, which we do every single month to our portfolio, we reallocate based upon those 5 strongest sectors, has really proven over a period of time to be, in my opinion, the only way really to succeed for any investor. Whether it's our global tactical opportunity portfolio or whether it's your strategy, but a strategy needs to be followed. So when I say success, if you don't have an investment strategy, and I know people say, Brian, I've heard you say that before, but unfortunately most investors do not hear what I'm saying. And that means you need to have an investment strategy and it needs to be followed. If you don't follow an investment strategy, you don't have one. And an investment strategy, unfortunately, today is not buy and hold. It never was buy and hold. You need to make sure that you are buying and making appropriate changes to your portfolio based upon your strategy. A strategy needs to be in writing or you have no strategy at all. It's just like baking a cake or making something in the kitchen. If you don't have a recipe and you don't follow it, it's not going to turn out correctly. So what I tell investors, if you keep doing the same thing or you keep using that same advisor who's really acting as a broker and expecting a different result, unfortunately you're going to keep being unhappy and keep seeing the bad side, in my opinion, of returns. The economy is getting slowly better in the U.S. Emotions are not a good driver of decisions either, as I've always told investors, and that's one of the reasons why you need to really focus in on the strategy that is appropriate for you based upon your risk measures. The economy gets better. As the economy continues to get better, we're starting to see inklings over on the other side, which is the emerging markets getting a little bit better also. And not that they've ever really slowed down to a great deal, but you're always going to have bouts of temporary setbacks in any investment sector, whether that's currencies, gold, emerging market stocks, dividend payers, what have you. You're going to get temporary setbacks. So what happens is, as the economy kind of muddles through, we're in this deleveraging cycle, which ultimately, as I've said before, is going to be a net positive. I outlined specifically in my newsletter over the last couple weeks areas that I feel are extremely appropriate. Now, those areas are going to change as the year progresses. We're going to start to see divergence in other areas, other sectors that may start to outperform some of our small, mid-cap, and large cap within the U.S., which we are primarily invested in, by the way. We continue to hold a substantial position not only in emerging market debt for income purposes, but we continue to own some high yield debt in addition. I think investors today really need to understand that shaking up the situation and making some changes to that portfolio in areas that, again, are relatively stronger than others and really provide that global opportunity for income is going to be more important than ever. The economy is getting slowly better. When things are at the all clear and the market's up 50, 60% and your portfolio missed out, what I tell people is that's exactly the time most investors start to pile in when things already look incredibly good. They chase things that have done exceptionally well only to be, unfortunately, misled down the wrong path. Buying investments that are overly heated, overly expensive, and overly valued is a recipe for disaster. So chasing previous returns, the highest, and I'll give you statistical numbers on this, and I see this happen a lot. In fact, Morningstar published some reports on this, and we talked about this in last week's newsletter. But chasing the highest performing either A sectors or mutual funds or the like from the previous year to the next year usually result in a lesser return than the benchmark S&P. And on the flip side, buying the investments that perform the worst also does poor. So there's this happy medium in the middle. So again, I always tell investors, chasing what is the hottest, what everybody's talking about, usually is a losing proposition in return, and usually will add substantial risk to a portfolio. So one thing that I will tell you today, don't chase things that are super hot. Look for true value, look for relative strength, and look for trends in the right direction. Remember, any investment can go in two directions only. It's either going up or it's going down. The way that you have a chance to do better in your retirement portfolio, not only for income, but for growth, is follow areas that are relatively strong and are trending in the right direction. Things that are trending in the right direction historically have outperformed and historically keep going in that direction. Things that are trending down have historically underperformed and continue in that direction. So remember that in your portfolio. Holding underperforming assets over a period of time is going to wreak havoc on your portfolio and lessen your return. This is Brian Resney with the Resney Wealth Report. We've got an incredible show on Sunday. I will be talking specifically about 5 stocks to sell now and 5 mutual funds that you need to dump and unload now. By the way, these 5 mutual funds are probably in 50% of our radio listeners' accounts, especially if you're dealing with any of the brokerage firms and you are dealing with a broker. These are must-sell mutual funds. I'm going to talk about these on Sunday, so make sure you do listen to the radio show. And as always, if you want different results, you need to have a different strategy and do different things. Call our office for consultation. It doesn't hurt to sit down with somebody and get a second opinion on your portfolio. If you're concerned about your money, you'd like to find out why our global tactical opportunity is adaptive in up markets and down markets and can help better your retirement, call us for a consultation. We would love to help you. If you're a qualified investor, call our office, please. We would love to sit down with you and talk about your portfolio. Call the office and make sure you do listen to our radio show on Sunday. It will be an excellent show. You're not going to want to miss it. Have a great day.